this is a simple P&L account. So we'll try to do a simple P&L account and a simple balance sheet, and we'll try to find out how it works. Okay. So here we have a P&L account. So I'll just read it once for you. From the following information, prepare P&L account or statement of profit or loss account for the year ended 31st December 2017. And they have given us revenue, freight outward, packing charges, sales commission, promotional expense, office, telephone expense, bad debits recovered, interest received, financial charges, repairs on vehicles, depreciation, interest paid, and rent received, and carriage inwards. Okay, so our job is like very simple. We just have to know like what is the format for statement of profit or loss. Okay, and we have to just insert the numbers. So we know what is our revenue. So our revenue is like straightforward, it is 60,000. The next item is freight outwards. Okay, so freight outwards comes under the heading sales and distribution. See, the different thing about IFRS formats. See, what we are following here is IFRS formats. In IFRS formats, they neatly create, or they only have these headings as per the format. Okay, they don't take any more additional headings in the format. So within these headings, we have to incorporate all these expenses. Okay, so if you are going to have a lot of expenses like this, you have to summarize them under the relevant headings. Okay, so what I'll do is I'll create 3 accounts. Okay, additional working notes. So we'll start. So freight outward is sales and distribution expense. So I'll put it here. So I'll put it as 15,000. Next is packing charges. So again, I think it is a sales and distribution expense. So that comes to 12,000. So the next one is also sales commission. Next is again promotional expense. So next is office telephone expense. So office telephone expense is an administration expense. So the next one is bad debits recovered. So where can we put bad debits recovered? So shall we like put it under cost of sales, sales and distribution, or administrative cost? So where could we put this? See, it depends upon where the company wants it to be put to be shown. Okay, so normally where we show provision for doubtful debtors, there we could show the bad debits recovered. Okay, so what we'll do is we'll put bad debits recovered in administrative expense. So bad debts recovered is a income, right? But the previous one is an expense. So what we'll do is we'll put a minus sign and we'll have it. Next one is interest received. So interest received is here. There is an income. So we'll put it as interest income. So that is going to be 2100. Then we have financial charges. So we'll open a working note for that. So we have financial charges, which is 4,000. We'll just type it here, which is 4,000. And then, okay, first I think we'll post this and then we'll come. So we'll post this financial charge under finance cost. So then we have repairs on vehicles used in office. So we'll put it under administration expense. So we'll put it as repairs. So that comes to 8,000. The next one is depreciation. So depreciation of office vehicles. So that also we'll put under administration. Next one is interest paid, which is 9,000. So next one is rent received. Okay, rent received is a non-operating income. Okay, so is there any non-operating income? Yes, interest income is there. Okay, so if you want, we can add rent received with that. Interest and rent income. So put together we'll add and we'll show it as 9,100 here. Okay, or else we have to only open a different working note. And last one is carriage inwards. So carriage inwards comes under cost of sales. So we'll put carriage so carriage inward is 4,000. Okay, so the total cost of sales, we don't have any opening stock, closing stock, or any other concepts here. Okay, so directly there's only cost of sales available, and that we will directly show under cost of sales. So that comes to 4,000. And then the sales and distribution expense put together comes to 9,625. 9,625. And admin expense totally comes to 29,400. And finally we have finance cost put together, that comes to 13,000. Okay, so you can see here the format looks neat. So all we have to find out is the gross profit. Okay, so once you have found gross profit, you can find operational profit, which is gross profit minus okay, so we got operational profit. From there we have an income under cost. So our profit after tax would be operational profit plus the income minus the expense. So this is our, we don't have tax in this problem. Okay, so whatever is our profit before tax would be our profit after tax. So the main elements in this problem are profit from operations and gross profit. So these are the main elements in this problem. Okay, so the IFRS format for statement of profit or loss is quite different from the normal debit credit P&L account. Okay, because in debit credit P&L account we usually show all these expenses in the debit side and the credit side. So that's what you usually that's what we usually do. Oh, 1 second. Okay, that's what we usually do. But here if you take, we do all the working notes below, okay, for all kinds of expenses, and we show only the heading expenses here. Okay, heading expenses you can show any heading expense you can bring here. So it's not only like sales and distribution. Even if you have office expense and you have several office expenses, you can bring it here. That won't be a problem, but they want this to be as clear as possible. Okay, without making too much of detail here. Okay, so in this problem we have not considered opening stock, closing stock, or even purchase we have not considered. Okay, so if these elements are coming, then we will be like touching the cost of sales. So this is about the P&L account. So we will now move to the balance sheet.